Hi, everybody, and welcome to the Lafora Talk Show, Expert Edition. This is Season 2 and Episode 3, and we are very excited today because we're going to be talking about credit. This is a topic that is really, really important when you come to the US. For many nurses coming to the US, you come here. One of the main reasons is to improve your life from a financial perspective, and understanding how credit history works is a vital part of that. So first, introductions. My name is Tanya Friedman, and I'm the Chief Operating Officer of Kinetics USA. We help nurses all over the US coming to the US and have done so for many years through direct hire. And I have with me a very esteemed panel. So first of all, ladies first, we have Blair. Hi, Blair, welcome.
Hi, good morning, everyone.
We also have Rod.
Good morning.
And last but not least is Darius. Darius is a nurse that has been in the US for a little while here, so he's going to be sharing his experience. Blair and Rod are our two experts, and they're going to be giving a lot of very important pointers and tips in the next 45 minutes to an hour and these are the topics. What is credit history? Why is it important? What is a credit score? How does it actually work? Also, most important, when you arrive in the US as a new immigrant, you won't have credit. So how do you get started? Another question, how do you build it? Not just get started, but how do you build it? And what are the common mistakes that people make in terms of their credit? Best tips and advice from the experts. So we've got a lot of information to cover. Everybody who's watching from all over the world, welcome. I see that we have Karen Bernadette watching, Alec is watching, Joyce is watching, Joe is watching, Etchel, I know Etchel, hi Etchel, Desi, Karen, Joyce, many people watching from all over the world. If you are watching right now, feel free to post your questions into the chat. I also have a whole lot of questions that nurses have sent me, and we're going to get straight to it. Okay, so before we start, actually, I wanted to just share a quick personal story because, as many of you know, I was an immigrant myself. I came here 21 years ago. I'm now a very proud citizen. I came from South Africa. I came with my husband, and my children were little at that time. One was 8 and one was 4. And my first encounter with credit history was we had to buy a car. So we didn't even know what credit history was. And we went to a car dealership. The salesman was very excited to see us coming in with our children. He thought, great, this family want to spend money with me. He was very excited and very animated when we came in and met with him. We chose our car. The kids were all excited. And he disappeared for a few minutes. And when he came back, he said his face had changed completely. He was very kind of like solemn. And he said, "You have no credit history." So this was really a big shock to my husband and I, because we didn't even know what credit history was. We didn't have that in South Africa. We've never experienced anything like that. And we realized that we couldn't buy a car at that time, which we needed for our family, because we didn't know what credit history was or where to even begin. So Rod, I'm going to start with you. What actually is credit or credit history?
So credit is simply buying something that you then pay for at a later date through agreed upon terms and under the terms of a contract, usually with interest or extra or additional fees or both. When you have that agreement, like something for a car, you're paying it back over time, that account gets reported to companies like Experian, which are credit bureaus. And those payments then become part of your credit history or your credit report. And that credit report really acts as your financial references. It shows that you manage your debts well, that you pay your bills on time. And so the next time you go in to talk to a lender about buying a car or buying a house or getting a credit card, they can see that credit history and that you manage your debts well, and they'll be able to open an account for you too.
Okay. So very important just at the beginning to understand what it is all about. And really, I think it can just be summed up as like your track record, your track history of your borrowing and your repayments. And lenders are going to look at that to see if you are a risk or not a risk, correct?
Correct. Yes.
Okay. So Darius, what is the first time as a nurse who immigrated to the US that you heard about credit?
So, hi, good morning, everybody. So, I think we have the same experience.
Darius, I'm so sorry to interrupt you, but if you want to maybe just put your volume up a little bit.
Okay.
It's difficult to hear you.
One
And you want to maybe just give us like a 2-minute background about your background as a nurse coming to the US?
All right, can you hear me?
That's a little better.
Okay, that's a
Maybe
little better.
speak up.
Okay. Is this better? So, I immigrated here in the States in May 2019, coming from the Philippines. I migrated here together with my colleagues and my friends. So, like Tanya, my first experience about credit history and credit score when we were about to purchase, our cars, which are needed, to be able to go to work. So, being an immigrant, of course, like Tanya said, it was difficult because we don't have credit background history. In the Philippines, we also don't have. I mean, not that I know of, but we don't have a strong credit history record or financial records in the Philippines. That people base your credit history or lending history. So in the States, getting the car and getting our first apartment, renting the first apartment was our first experience or my first experience, hearing about how important credit scores are or credit history is. So that was the first time as well.
That was the first time. Okay. And Blair, can you maybe share with everybody watching from a credit union or a banking perspective, why is credit important?
Credit is extremely important in our U.S. banking system because it measures a person's credit worthiness. So all encompassing, that's, the extent that the U.S. banking system recognizes or classifies that a person is suitable or capable of receiving financial credit. So it's your likeliness to pay back the money that you are borrowing. So within the credit worthiness, your credit score provides that general estimate of what your credit worthiness is based on, your credit report. And that then determines your interest rates for any loan that you would obtain, any money that you were to borrow. So a lot of people don't realize the huge difference. Just, 0.5% in interest rates could be the difference between thousands of dollars. So it's very important that you have, a very good credit score that gives you positive credit worthiness, and in turn will give you a lower credit score, ultimately saving you money, which is your ultimate goal. So it's extremely important that we build good credit and we understand it, but it's a vital part of our U.S. banking system.
Yeah, there's no way around it. When I first came here, a friend of mine kind of explained it to me and as with an analogy and said, it's kind of like when you're a high school student, you have to have really good grades in order to get into a good school, a postgraduate school. So it's kind of like that same past behavior predicts future behavior kind of thinking, that a new school is going to say, okay, is this a good student? Or the school will say, yeah, is this a good student? Am I going to accept them into my university or college? Yeah.
Yes.
It's a prerequisite for your financial health. There are minimal credit scores that need to be met to be members of financial institutions. For specifics, our credit union, you have to have a minimal credit score to have certain credit cards, to obtain certain loans. So it's not just, I have a bad credit score or no credit that I will have a higher interest rate. No, there's a chance that you will not be able to obtain these items. So yes, it's a prerequisite to your financial health.
Prerequisite to your financial health. I love that. That is a really important factor to bear in mind. Rod, maybe you can share with us, how do the credit scores work? How does, what is a good score? What isn't a good score? And how does the whole thing actually work?
So there are two things that are going on, and the school analogy is a good one because I use that as well to talk about credit reports and credit scores. So you have a credit report, which is what Experian compiles, and it shows your credit history, the accounts you have and how you're repaying them. As Blair said, it's a reflection of your, what we call propensity to repay, or likelihood you'll repay a debt as agreed. So it shows your past credit history. When a lender requests your credit report, they can also request a credit score, or they may calculate their own credit score. A credit score is simply a reflection of the information in the report that is a statistical way to predict risk. So if you think of the credit report as kind of a paper you would do in school, and the credit score is like the grade you get in school, and the teacher's kind of like the bank or the credit union. So they will look at your credit history, and they use a credit score to analyze the information from that credit report. And that results in typically a 3-digit number that ranges from 350 to 850 in most cases, but there are some that are different scales. And that number represents the likelihood that you'll repay a loan, or the risk that you won't. So having a good credit history and taking care of your good credit history will result in good credit score. So I always tell people, you focus on taking care of your credit report, and the scores will take care of themselves because they just reflect what's in that credit report.
Okay, that's a great explanation. We actually have a slide that we're going to show now, which will show what is a poor score, what is a fair score, what is a good score, exceptional and very good score, because I think it's very important for people visually to kind of see that. And I think that's when maybe it starts to make sense. So our team is going to just share that for you now. Okay, so let's talk a little bit about starting your credit. Starting your credit is really difficult for international nurses because, first of all, they don't even know what it is. And second of all, they don't have a history of credit. So Darius, can you maybe share with us how you started your credit?
So, well, as Rod and said a while ago, so it's basically our through credit can be obtained through by purchasing. So at first, when we applied to get our car, and we don't have a credit background, our company or the agency who petitioned us to the U.S. had to issue a lot of documents to prove that we are able to pay for the car, and we applied with a certain bank, and I guess if I'm not mistaken, to be able to approve, to be able to get that car, the bank has to stand as a lien holder for our cars that we purchased. And then so that was the first part. The second thing that I did was I need to apply for a credit card. I know that it sounds difficult because, like, knowing you don't have a background history or a financial history, you cannot apply for a card. But I think luckily for that time, Discover was offering credit cards for new immigrants. So I grabbed that, and then they have given me initially a credit limit of I guess like $800, and from that standpoint, I was using my card every day for purchases, for groceries, for gas, for whatever things that we needed. And then from that point, the credit is building. The credit score is trying to build. And as Rod said, it's not just about the credit cards. It's about your bills. So as we pay our apartment, our utilities, phone bills, your credit score also builds. So as long as you pay them on time or advance, it will take a good effect on your credit scores. However, if you pay late or you forgot to pay your bills on time, especially big amounts, and if there will be like really really big interest, it will really hurt your credit. And as you said, Tanya, the analogy is like, it's like grades. So your credit score actually is like a basis of your capacity to purchase items or what have we.
Okay, thank you for sharing that, Darius. So there's some great hot tips that you have given nurses who are watching now, who are all over the world and are worried about credit and how to get started. So some of the things that you've spoken about is getting your employer to assist, getting maybe like a secured credit card.
Mhm.
Rod or Blair, are there any other tips, hot tips that you can share about how to get your credit started? Any other ideas?
So I'll jump in a little bit. And one of the things Darius said isn't exactly true. Utilities and things like cell phone payments aren't actually traditionally reported to the credit bureaus. So, but you can have them reported now. And over the last 2 years, Experian actually launched a service called Experian Boost that lets you, if you have utility services, so natural gas or electricity or water, or you have a cell phone bill, or you actually have streaming services, you can go to experian.com/boost and enroll in that service. It's a free service, it's permission based, and we will capture those positive payments. So that's the good payments that you're making and add them to your credit report as accounts. And so it's a great way, once you have a credit history established and you just need 1 or 2 accounts to start, you can add that, and that will help improve your scores. And what we're seeing is, on average, for people within files, which particularly is true for new immigrants, is an increase of about 19 points. So it's a significant start, and it's a good way to get going with that credit history. So that's fairly new. And you can also have your rent payments reported. So if you search Experian, you can find Experian's rent reporting, and you can work with a third party to have your positive rent payments reported. That is proving to be very powerful in helping people establish a credit report and to build that credit score as well. So encourage people to look into those 2 options. They're fairly new and actually empower you as an individual to have good information added directly yourself. So.
Okay, that is fabulous information. Thank you so much for sharing that, Rod. And the interesting thing is how things change. And you said those are 2 new items. So on the LaFora Talk Show Expert Edition, you're hearing it hot off the press, and that these are some additional ways for you to build your credit and get started when you arrive in the US. And we will be posting those links into the chat so that anybody who's interested can look at ways to get their credit started and make sure that they maximize it as much as possible. Because as Blair said in the beginning, 1/2 a point can make a big difference. We are going to share the slide now of what is good or bad or exceptional credit and what the scores actually look like. And as we're doing that, Blair, can you maybe take us through this?
Yeah, absolutely. I do want to add that from the beginning, a credit is not an overnight thing. So especially for immigrants to build credit, it could take anywhere from 3 months to probably a year to establish a solid credit score, credit report. So it's not an overnight thing. It's not a sprint. It's for sure a marathon. So just be patient and go about it that way. But so a person's credit score is made up of 5 factors. So they have payment history, which accounts for 35% of the score. That's, making your payments on time, any late payments. And a very fun fact, not very fun, but one late payment could take 7 years to bring up on your credit score. Now, like he said, Experian Boost is an amazing tool. It's great. However, one late payment can take up to 7 years to repair on your credit score. So payment history is at 35%. The amounts owed makes up about 30%. So it's highly influential. Like it says, it can determine, your mortgages, your auto loans, property loans, credit cards, anything like that. Even accounts and collections, unfortunately. Length of history accounts for 15%. that's not going to be a big booster for you guys, just because it takes a while to build that up. So length of history really only gets an A grading once there's at least about 10 or so years obtained of history, but it's quite a small factor. Then new credit is about 10% of the score, and then the types of credit used, which is differentiation, whether you have a mortgage, an auto loan, a signature loan, a credit card, that is that final 10% of your score. So the two things you really want to focus on are making your payments on time, staying current, using like auto pay or bill pay, and then also the amounts owed. So there's a difference between, current debt and available credit. You want to minimize your balances on credit cards and that revolving credit, and don't open new credit cards just to try to increase your available credit. Think wisely when you're trying to boost those things. But it's a little bit complex. The whole credit scenario is a little bit difficult, but this is why it's broken down into the areas that you can focus on. And each of these areas usually gets a letter grade, and you can kind of determine that, and that makes up your all comprehensive credit score.
Okay.
Yeah.
Well, this is a lot of information. Rod, do you want to add something, some tips to that?
Yeah, and Blair's right. I always like to touch on the amount of what we call utilization rate. So as you start to use credit here, you'll hear that term. And so, what I always tell people is exactly what Blair said. If you pay your bills on time and you keep your credit card balances low, for most people, that's going to result in everything else being good, and your scores will go up. So one of the fastest ways to help credit, if you have a credit account and you have a credit card, is to pay down your credit card balances. That's the utilization rate, your balance to limit ratio. And that's the second most important factor in scores, right behind that payment history. So pay down those, keep the balances low on your credit cards. You don't have to have a huge credit limit as long as you're paying the balances and keeping them low as compared to the limit you have.
Okay, really good information. We have some questions that have come through in the chat, and I want to ask some of those of the panel. So one of the questions that came through is, will it affect my credit score if I apply for a new loan or credit card? Darius, did you ever apply for a new loan or credit card?
Yes, I applied after my Discover. Of course, I had to apply for another credit card. It's okay. I applied for a Delta, Amex, and sometimes it's hard to be approved by American Express, without a good credit score or credit standing. And yeah, that's true. As what Blair said. Actually, a lot of credit card companies will offer you credit cards if you have like good scores or like fair scores. They would try to lure you by offering a lot of offers in your mail, but you have to be responsible on which credit card you will apply to. Like you also have to check interest rates, annual rates. I actually, this is based on experience. I applied for Amex and then I applied for another bank, which I will not just mention. And then I think I did not really read the entire, agreement for applying for the card, and that it has like a monthly or an annual rate, which is really, really high. But then, as long as I'm using it and I'm paying my bills on time, and whatever I borrow, usually I will pay them right away. It has a good effect on my credit. Although you can purchase items that you can pay staggered or like in installment, I still make it to the point that if I have the money, the cash, I will pay them. So that's just my principle in using my credit card. So if I will use the card to purchase an item, I should have the money or the cash available to be able to pay them right away. Because I just, based on my experience also before, if you pay like the minimum amount, there are interest rates, and interest rates in the US it's crazy sometimes, and you might just notice, but the interest rates are very, very high, and significantly it will affect your credit scores or your credit history. So, and I have five, but I will limit just myself for 5 credit cards. And what I do is I use one for groceries, another one to book flights if I needed to travel somewhere. The rest is for bills, utilities, and if I have to buy, of course, clothes, uniforms, and etc. That's it.
Okay, well, that's some good advice. Rod or Blair, how many credit cards is optimum? Is there like a number?
It more so goes to your credit limit, not specifically the card and how you use it. So different cards, I know our program that we have is specifically for people in your situation, for immigrants coming here, our limit is $2,500. That's a great credit limit. Now you can have 4 credit cards that equal that $2,500, but your score is going to go based on that open credit limit. And I get super giddy talking about credit. Like one of my hobbies.
We love your passion, Blair.
I know, it's very strange. I catch myself having like normal weekend dinner conversations about, I'm like, this is not what we should be talking about. But something that I do want to say is try very hard to not consistently apply for new credit. In the position that you guys are in, you will be heavily, heavily solicited via mail, email, all sorts of things for these credit cards. They are not all made the same. Pay attention. Look for ones with 0% and 0% introductory APR for the first 12 months. No annual fees. Fees on balance transfers, fees on all sorts of things. You have to look at them. They are not all made equal. Also, there's the banking system. It's a little bit confusing. There's installment versus revolving debt that you have. So apply for any credit over a very short period of time, because applying for credit consistently over a longer period of time will hurt your credit score, because your credit report will be hit with these hard inquiries over and over again every time you apply for new credit. So make sure if you're applying that you're doing it within a small time frame, because things that are done within 30 days, if you're rate shopping or looking for approval, will be conducted as, smaller hits. Now, every time you're applying for one of those credit cards that you're solicited for, that is a hard hit. So that's a topic. Hard hits and soft hits, it's a little bit different, but that will negatively impact your credit score with every single hit that you make.
Okay, thank you, Blair. Rod, do you have anything to add to what Blair is speaking about? And maybe you can elaborate a little bit about what is a hard hit and a soft hit.
Yeah, so Blair and I have something in common. It's the same thing. We start talking about credit, we could go for hours.
Well, that's why you're on the panel. That's why you're on the Lafora expert panel.
Have a virtual lunch and talk about credit.
But yeah, so there's a lot to think about. So you asked about an optimal number of credit cards. There really isn't one. It depends on the person's individual credit history and the unique nature of it. You don't have to have any credit cards to have a good credit score, but it can help to have one or two. So, one is enough, maybe two, as long as you're making a small purchase and then paying it in full, just like Darius described. You're showing activity in that account. And a credit score in most of them will not include an account in a score calculation until it has at least 3 months and often up to 6 months of activity first. So when you get an account, don't expect your score to start to go up right away. It's going to take a bit of time for that account to have not only a presence in the credit report, but also some activity to show that you manage it well. So it takes a bit of time. When we talk about inquiries, you always tell people inquiries in the industry, reporting industry, we call it the fifth factor because it's always the least important in terms of scores. But when you apply for new credit, we have to show a record that someone's looked at your report for that because you've applied. That's called an inquiry. It can affect scores a little bit because it indicates there's potentially a new debt that doesn't show up yet as an account in your report. Typically, after 2 to 3 months, that inquiry, while it's still there, won't have any significant impact on the score because there'll be a new account, and that becomes the risk indicator. Or there isn't a new account because you said, no, I don't want that account. And so it doesn't affect scores because there's no new debt. And by the way, the most powerful word and important word in credit is no. Because as Blair said, you'll get lots of offers. If you can say no, you can use those to your advantage because you can find the ones that give you the best incentives, the lowest interest rates, the discounts on airline miles, whatever it might be to use to your advantage. But you have to learn to say no. That's the most important thing.
Wow, that is very good advice. Very hot tips there. And I think for anybody learning about credit history for the first time, this is a vital, vital show. Lafora admin team are amazing. They give us this opportunity to share information for nurses that are coming to the US. So I would really encourage everybody who's watching right now to tag your friends and your colleagues and your relatives that are coming to the US, or even if they're already living in the US, because we want you to pay it forward to them and make sure that they are learning about all of this valuable information. One thing that I have a question here that is kind of an interesting question. It comes from Abby, who is asking, what is the difference between good debt and bad debt? Because for many nurses coming to the US, and for myself as well as an immigrant from South Africa, you come here with the kind of thinking that you shouldn't take out credit cards, that you shouldn't get into debt. But there's a difference. Can Blair or Rod, if you want to explain that?
I guess I can jump in.
Okay, go ahead.
I was thinking of good debt are things that have a return on that investment or that you're using as a financial tool. So, we often think of mortgages as good debt because a house will gain value, but you can also use something like a credit card. And if you're using the credit card as a financial tool and you're paying the balance in full, you're not taking on debt, but you might get discounts on purchases, so it would save you money, or you might get airline miles so you can reduce the cost of travel, or those sorts of things. So good debt is debt that there's a return on. If you're using it well and creating a financial advantage for yourself, that's good debt. Bad debt is any debt that results in you having stuff, but you're not sure why, or what you bought. And that's what credit cards can do. So, you realize you suddenly have this huge credit card bill and you just have stuff. And, so it's the stuff debt that's the problem. That's what gets you in trouble. And I think with credit cards, it's easy to make impulse buys. That's usually bad debt because you're not thinking about how you're going to repay it, why you need to make that purchase, why do you need to have that debt. And so, good debt is debt you've given some thought to, how you're going to repay it, and you understand the incentive or the value for taking on that debt when you do. And so, that's sort of the way I approach it.
Yeah.
And that's when you got to say no, right, Rod?
That's right. Yeah. Right.
My rule of thumb on this topic is always the purpose of the purchase. So your good debt has the potential to increase your net worth or enhance your life in an important way. So a mortgage, a vehicle, anything that can increase your net worth. Bad debt is when you, again, borrow money to purchase rapidly, like depreciating assets heavily, or just for the purpose of pure consumption. Everything in moderation. But when you use your debt to purchase things, like he said, that can be considered bad debt if abused. But if you're purchasing things for the betterment of your life to increase your net worth or your potential net worth, then that is considered good debt. So it's just the purpose of the purchase.
Darius, can you maybe share with us when you came to the US, maybe where you maybe had some bad debt, maybe something you regretted that you went ahead and bought, or some good debt?
Well, good debts. What else? There's a lot. So I think it's just in connection to what Blair said. As long as you're being responsible. So I guess we can't really help sometimes, when you're here in the States and it's your first time to buy these things and stuff. Sometimes there's that, that itch that I want to buy this. Anyway, I have a credit card. I could pay this next time. And I think it's about the credit card company without really reading the terms of their of usage, and you end up having lots of interests, and I guess from that standpoint, I experienced like, paying a bunch of interest. And if I'm not mistaken, I have a card, like if I don't make a certain purchase or amount for a certain time, they will charge me with like an interest of like 18 or $20. So I actually had to cancel that card because of that, because it's a necessary payment. And in effect, it also affects my credit score. But so far I have been responsible with my purchases. I have purchased like thousands and thousands of, I mean, some stuff for thousands of dollars. But I just had to make sure that I have that money available in my bank or in my savings, so that when the right time that when the time that I have to pay them, it's readily available. And I think the key here is really control, like Blair said, and also another key is to delay gratification. I know some of us, like Filipinos especially, when you go here in the States, you would see a lot of things, great things, and you just want to get everything. I want this, I want that, I want that, I want 3 cars, but you have to be I think before going here to the States, I was able to develop that attitude of, being financially mature. Like if there's something that you want, number one, you have to consider, like Blair said, do you need it? Number two, would you keep it like for long years or for long term? And number three, would you not end up selling it? Because a lot of people will buy stuff and then after a couple of months or years, they will end up selling it. So for me, it's just a waste of time and money. And as I said, that's also part of financial maturity. And delayed gratification, save, because even though nurses are being paid good right now, not because of the pandemic, but nurses are really being paid good to begin with. But you have to save, you have to delay whatever you want. So you have to plan ahead of time whatever you want to purchase. Like if you want to buy a house, a car, or whatever. I think it should be planned well. It should be thought about, not twice or thrice, but many times in your head. And trying to picture out if do you really need it, as what Blair said, because a lot of people just really want to buy things because they want it, but not because they need it. That's all.
Yeah, that really is the key, Darius, is do you want it or do you need it?
Right.
When my daughter was little, she used to say, but I need it. And I was like, no, you just want it. And that's often what happens to us when we come into America as immigrants and we see all these wonderful things or things that you've seen in the movies and you just want it. So I think that's really good advice, is to plan and to be financially mature.
And just to add, Tanya, if I really want something, this is just an advice for nurses. If I really want something, like for example, I see this and I really want it, or I think I need it, I would not buy it the first time I saw it. I would, like go home, think about it. Maybe I'm just hungry or sleepy, or I'm just stressed, because I have that tendency when I'm so stressed, I buy things as my form of relaxation. When I was in the Philippines,
that's all of us, Darius.
Right. When I was in the Philippines, I just go to the mall, because the mall relaxes me, and sometimes you end up like buying things that you don't really need. So I go there, look at it 5 times, 6 times, then go home, then go back, and really like make a decision, and then check on my apartment. I have this actually at home, so I don't need this. So I'm on that point, like.
Well, we call that retail therapy.
Correct. Yeah.
And it can be very, very gratifying, but it can also be very detrimental. But you are absolutely correct. The U.S. is a very consumer-driven country. Right. No matter if you're on social media, if you're watching TV, if you're driving down the street, you're going to see advertisements and billboards. And then it's the keeping up with the Joneses, wanting to buy this and that. And it's all about, like I said, the purpose of the purchase. Are you buying it to better your financial health, or are you buying it to satisfy a temporary need? Is it a permanent solution to a very temporary desire?
Yeah. Right. And maybe a good thing is we're going to show that slide again with the credit scores. So our team will show the slide with the credit scores. And maybe this is a good thing to kind of keep in your mind when you are deciding if you want it or if you need it, and look at the difference. Rod, do you want to maybe just take us through this one more time and just talk about the difference with the different scores?
Sure, and this is from a FICO, what we call a FICO score, FICO 8 in this case. So there are different scores, but very similar. We rarely see people, with scores, in the below 500. But if you're new to the country and you don't have a credit history, you don't really start at zero. So, if you have low scores, it's going to be harder to get credit. So if you're in the fair range, you may qualify for applications for credit cards or loans, but you're not going to get the best terms or rates. Once you get into the good range, you'll get better rates, or you may, if there are higher risk tolerances for a lender, you might qualify, but again, not at the best terms. When you get into the 740, 799 range, that's what we think of as prime. You're probably going to get qualified every time you apply, and you're probably going to get the best terms or rates, or very nearly so. And if you're above 750, generally you're going to qualify for the best terms and rates in most cases. If you're in the 800 range, it means you're managing your credit well, you're doing all the right things, you're keeping your balances low on your credit cards, you're making your payments on time every time, and you're building that credit history over time. And it takes time. Time is one of those things that people don't think about when it comes to credit and credit scores. That's probably the most important factor, is being consistent and being responsible and making sure that you're managing your credit well over time, because that's what scores are looking at, is are you paying your bills on time, taking care of your credit over time, and not just what did you do yesterday.
Yeah. So I think this diagram is maybe a good one for us all to print out. I'm just looking at the chat, and Jennifer saying, I need all things. So Jennifer, like all of us, maybe that diagram's a good one to kind of put on your fridge and remind yourself about what your goal is and how you want to create your net wealth, not just see every nice shiny thing and buy that, because it really is going to make a very big difference to your financial future. We have some more questions that have been put into the chat. So we have a question from Beth, who's asked, I've heard that it's a good idea when I arrive in the US to ask a friend or relative who is established here to co-sign a loan for me on my first credit card. Is this true?
Yes. So from a credit reporting standpoint and establishing credit, if it's a credit card, you might ask them to add you as an authorized user instead of a joint account holder. As an authorized user, you benefit from the account if it's being paid on time, but you're not responsible for the debt. So it would establish a credit report for you and show the positive payments, but if the account becomes negative, Experian will actually remove it from the authorized user's account. So it's a good way to kind of safely start a credit history. If you're a joint account holder, you're responsible equally for that debt. So if they don't pay the bill, you have to. So it's important to understand what your responsibilities are. But either way, being added as an authorized user or becoming a joint account holder, or having someone co-sign for a small loan, maybe a piece of furniture, something like that, might be a good way to start a history as well.
Okay, so thank you for that. If you have a relative or friend who's prepared to do that for you, that is a good option. But again, as I think it was Blair who said, I think it was Darius who said, you've got to be financially mature, because you've got to remember that if for some reason you're going to pay late or you default on that loan, that is going to affect your relationship. So people first, as the guru Susie Orman always says, and money second, and you need to protect your relationships as well. I think that's important. On the pre-show last night, Miss Jean, who's one of the admin of Lafora, spoke about getting a secured credit card. Blair, do you want to speak a little bit about that?
I'm sorry, you had cut out at one point. All I heard was credit card.
Oh, okay. So I was just saying on the pre-show, Jean, Miss Jean, who's the admin of Lafora, was talking about getting a secured credit card.
Oh, getting okay. So a secured credit card is different from your just regular credit card, but it's a type of card that has the security, obviously, and it's backed by a cash deposit from the cardholder. These limits are often a lot smaller. Some of them are $250, $500, but I'm trying to think of a term. The cash that backs the card serves as like collateral on the account. So it gives you that security in case you can't make those payments. So say you charge a purchase of $500 on a secured credit card that has $500, and you can't make those payments. You have the collateral from the account to back up those payments. That way it doesn't negatively affect you. It's a great option. It most often, like I said, comes with lower limits, but it's a good option if you don't have a very good credit score, that you're able to still try to work to build your credit and obtain credit. But it's kind of like he said in the beginning, you need to make sure you have the cash to back that up. So that's just that security blanket that you are able to pay for the things that you are charging in addition to the card. It's not like your normal credit card where you pay minimum balances monthly. So it just gives you a little bit of a security blanket and gives the financial institution a security blanket that you can actually pay that back.
Okay, so a good way to start.
Yeah.
Rod, one of the other questions that came up as well is, how should somebody be monitoring their credit? Because this is something, it's not like an event. It's something that you're going to have to do for the rest of your life of living in America. So what would you suggest is the best way to do that?
Mm-hmm. So several things I suggest, or at least a couple. One, you can get your credit report from each of the national credit reporting companies. So there are three: Experian, TransUnion, and Equifax. You can get a free copy by federal law once every 12 months through a website called annualcreditreport.com. So all one string. We actually are providing reports free once a week. So if you want to check your report through that site, you can get a free report once a week through next April because of COVID and the need to really stay on top of those kinds of things. You can also enroll in free services. Experian has a free monitoring service that will give you a free report once a month and a free FICO score once a month, along with the factors. So great way to monitor now with a free service and be able to take advantage of other tools that you might need, like loan calculators and payoff calculators and things like that. So I always encourage people look at those kinds of services, and you can find ours at Experian.com. Really easy to do. And you may also, if there's a data breach, which there was another major breach from what I understand yesterday with a cell phone service provider, you may find that you get a free offer if you're a customer for a monitoring service. I always recommend take advantage of those. They're free, and that way you can see that credit history, make sure everything is okay, and that they're not using your identity if it's been stolen. So several ways to get free reports and free scores.
Okay. Thank you, Rod. And we will be putting those links into the chat after the show. Darius, do you check your credit score monthly? And if so, how do you do it?
So one of my credit card companies, I think it's Discover, they have that, what Rod said, like a FICO scorecard that they issue like every month. So you could access it. Sometimes, accessing your scorecard could also like have a negative hit in your score sometimes. But with this bank, they will just allow you to access your your scorecard through FICO, and it's every month, and you can access anytime you want or anywhere you want. So I just like actually base that there, because like Discover is my first card and it monitors all of my transactions basically. So, and then sometimes like I guess last year I was able to receive like from FICO like an annual statement of my credit standing. Yeah, so I don't really have to like worry about it.
Okay, good. So you financially mature. You learn to say no.
Sometimes.
I would like to add, just on a personal level, I do use Experian to pull my information. I also, every year on my birthday, I go to annualcreditreport.com and I pull my credit reports. It just reminds me to do it. So I go to the dentist on my birthday and I pull my credit score on my birthday. And that really helps. I know it's annual. I look at it. I make sure that there's, no fraudulent charges or any theft issues on there. I make sure my limits are correct with my financial institution and my bank. One thing that a lot of people come to us, and this is a huge misconception, they'll come and they'll say, hey, I want to buy a vehicle. I want to do this. And we'll pull their credit and look at it and they'll say, well, no, Credit Karma said I had a 780, or Credit Sesame told me that I had a perfect score. Those are estimates. Those do not factor in every account. Those do not factor in every bureau. Different financial institutions use different bureaus. Some use TransUnion, some Experian. It depends. So those are good monitoring services just to get an estimate to make sure you're in the right area, but you can't concrete go by those. Those are not official credit report and credit scores. So it's very important to monitor all three, but also go directly to a source or one of the bureaus themselves, as opposed to using that third-party service.
Okay, so some really good tips there, Blair, and I love the fact that you check your credit history in full on your birthday. That's your birthday gift to yourself when you see that great score.
It's been a gift for a while, so let's hope it stays a gift.
So I think that's really important. But I think for anybody watching who's not familiar with credit scores, I think, the basic concepts of checking your scores regularly, whatever means you use to do that, is very, very important, because you also will be able to pick up if there are any issues. And this comes up. People don't always realize that. Darius, have you ever had any issues on your credit history? Any like mistakes or errors that you picked up?
Minor errors, like I didn't know before, like for some inquiries that you make. I mean, this is common, especially to probably to Filipino nurses. Once they get here to the States, of course, they would like to inquire how much this house is, how much this property is. And whoever is the company will just ask you like, oh, can I have your social security so I could check your credit score? But they will not tell you that it would negatively impact. It's a hard check, so it would negatively impact your score. And I had that one incident that I didn't realize that it happened until I saw my credit score balance. So the lesson there is like, next time when I had to inquire for something, then I would ask like straight, do you check my credit scores? Like, are you going to check my credit scores about this for this inquiry? Because if I'm not really sure I'm buying this one, then I will not go with it, So it just happened one time, but after that, it was good.
But good that you picked that up.
Yeah, I mean, some people are very nice enough to say like, hey, if you really want to ask about this property, we're just trying to warn you that we will check your credit scores, and it might affect your credit scores negatively after we do the hard checking. And some people would not say it, so it's just like a matter of who the person you're talking to.
Mm-hmm. And anytime it's like a retail store, like a TJ Maxx or an Old Navy, or buying a vehicle or a house, make sure you ask them, is this a hard hit or a soft hit?
Right, right. Mm-hmm.
And that's a really good way to distinguish the difference.
Yeah, and I would add to, anytime you're applying, it will be a hard hit in almost every instance, what we call a hard inquiry. But again, if an inquiry by itself, what I always tell people is the inquiry alone will never be a reason you'll be declined. They typically have a very minimal effect on scores. Mm-hmm. So if your scores are good, it might be a 5-point or 10-point difference. That probably won't cause you to pay higher rates or get declined. But if you have late payments or other issues, that's going to be the real thing to address.
Right.
The other thing to know, just quickly, that's really important, is if you're shopping for a house or you're shopping for a car, especially, you let them shop those rates, because the scoring systems recognize you're buying one house or one car. and they'll only count them as one inquiry, or completely exclude them. So you don't have to worry about those inquiries for those purposes, because they know you're probably not buying 10 houses or 10 cars. You're trying to find the best rates.
Okay. Well, thank you for that. We have, it's a complicated topic, and there are just so many factors and so much to learn. I'm just looking through the questions just to see if there's anything, because I know we're in the final minutes now, anything else that we want to address. So this one question that we've got here comes from Rachel, and this is kind of the last question that we're going to go to. Is the credit limits, can you talk a little bit more about the credit limits and how this is important when building my credit? And can I apply to increase my credit limit? Yeah. So I think that's kind of an interesting question.
So I guess I'll jump in. So that goes to what we call the utilization rate, that balance to limit ratio on credit scores. And that's the second most important factor we talked about earlier. So if you have high balances as compared to your credit limits on your revolving accounts, your credit cards, it's going to hurt your credit scores. So keeping them low is important. Ideally, if you could pay your balance in full each month, that's going to be the best for your credit scores. You don't have to carry a balance. That's sort of a common myth. But what I find is when people ask that question, they have high balances or they're maxing out their credit cards. And so they think, if I open a new account, I'll have that empty balance on that account. And so that will lower my utilization rate and help my scores. The problem with that is you've opened a new account. So now you have that hard inquiry because you've applied. You have a new account with no history. You have, so it's unknown. So that poses some risk. And if you're tempted to use it, you're liable to max that one out too. And I talk to people who do that, and they get themselves deeper into problems instead of improving. So the best course when I talk to people usually is pay down the card you have, because trying to open a new account to offset a high balance usually backfires, because it's not just one thing that's changing.
Okay, thank you so much for that, Rod. So to finish off, I'm going to ask each person on the panel. Obviously, credit history is a complicated topic, as we said, and there's a lot to learn. But if you were to give your one most important takeaway to everybody watching about credit or credit history or credit scores, what would that be? Let's start with the ladies first. Blair.
Specifically, it would be to be very strategic with your purchases and start as soon as you can, specifically for people in your situation. Find a bank or financial institution, credit union that has a program specifically designed for people in your situation. So there are programs where you can obtain credit cards and auto loans and mortgages with no credit. And they will not only help you build your credit, but those types of programs will offer you higher limits, as opposed to if you go directly to a brand name credit card or something like that, or go with the offers that are being sent to you. So, we have different programs. He said that he had a different program. Find a financial institution or bank that has a program specifically designed for someone in your situation. Also, be very, very careful whenever you're purchasing things to not fall into the trap of no credit needed, no credit, no problem, things like that. No credit, yes, we're going to have a problem, because those are the situations that are going to get you in a very sticky situation that is going to take a lot of time and probably more money in the end to get you out of. So don't fall into the trap that consumers do for the low credit, no problem. Find a program specifically tailored to people in your situation. Ask fellow nurses, talk to friends, do things like this, and find out what they've done that works best for them and learn from their mistakes.
Okay, I'm pleased that you raised that, Blair, because that can be something that a lot of people see in the media and social media, and it's really false advertising, because you can get yourself into a lot of trouble. Thank you, Blair. Darius, what would you say is your biggest takeaway, the most important piece of advice you'd like to share with your fellow nurses coming to the US or in the US already?
I think three things. Number one, I mean, some of it has been mentioned by Blair. Number one, you need to plan ahead of your purchases. Think about it, plan for it. Think if you really need it or if you just want it, and think of long term. Number two, as much as possible, I know, like, as what everybody said, like here in America, you could just like everything you see, it's like, it's very, very tempting to buy, especially shiny things that you've always wanted, like when you were from your country, or where have you been, but try to save and live within or below your means. Remember, you're here to earn, to save, because you're not just here for yourself. I'm not here for myself. I'm here because there are people who depend on me. So I would have to think about, like having money or saved money in cases of emergency. So make sure that you have that. And number three, in connection to what I said in number two, live within your means. I know, like, you would see like a lot of nurses, they've been traveling abroad, etc. They have this bag, this new, etc., like this car. So, don't compare yourself to others. Your struggles are different than theirs. Their situations are different than yours. And your financial struggles or your financial maturity is also different from them. So be that person, remember, find that reason why you're here. But of course, don't forget to enjoy, some people would just like work and work and work and save without enjoying. You have to live your life as well, but you have to live your life right and maturity. That's all.
I love that. Financial maturity. And as Rod said, learn to say no.
Yes.
Rod, final words, your best piece of advice for anybody looking to start and or build their credit history.
Yeah, so I think it's hard to top those, but I'll try. I'll be more specific for my industry. Be engaged. I think that with credit reporting, get your credit report. It's free. Getting your own report doesn't affect your credit score. So get your credit report, whether it's annualcreditreport.com or you enroll in a monitoring service, because knowing what's there is empowering, and you can then act on it. And you use the new kinds of resources that are available, like Experian Boost. You couldn't before have your cell phone help your credit history. Now it can. Take advantage of those new resources, the new tools, and know what's in that report and own it, because it should be a financial tool. That credit report should let you walk into a lender. You're going to know exactly what they see, and you can tell them, I qualify because I know I do, and I know exactly what's in my report. So let's talk, because then you have negotiating power. So it's empowering to know what's in that report. So get it, know what's in it, own it, and use it to your advantage.
Thank you, Rod. And I think the key there is empowering. So hopefully with the knowledge that you've learned today, and we will be posting a lot of the topics and articles and blog posts that were discussed in this talk show into the chat for everybody to review, hopefully that you will feel more educated and more empowered to improve your financial literacy and to prosper and grow in the US, which is the goal that we all want. So I'd like to thank the panel very much for their time. This has been an enlightening hour. I know that I've learned a lot of new things, and I hope that everybody watching has learned too. We will be having the next Lafora Talk Show Expert Edition in a month's time, so please join in. And for those of you who are watching, thank you for joining us. Please tag your friends. The Lafora is all about nurses helping nurses. That's why this is such a great community, and we are so appreciative to the Lafora admin team, to Miss Jean, Paul, Louise, Yanni, all of the admin who give so selflessly. Please do your part now and tag your friends and colleagues on this Lafora Talk Show Expert Edition so that they can also learn about credit history and how to educate and empower themselves. Thank you from my side. Just a quick shout out. please, if you have not yet passed your NCLEX exam, please do so. You heard it from Ms. Jean last night in the pre-show. Please do so. There is massive demand for nurses in the US right now. There is a lot of opportunity for you to come here to grow and prosper. And now that you've learned about credit history, so get your NCLEX done so that you can then also live your American dream. Thank you, everybody, for joining us, and we'll see you next month.